Hey, good morning, everybody. It's Brian. It's Monday, 14th of September. Here for just a quick morning update, let you know what key levels we're looking at, what we're looking at here in Forex, and kind of what news is coming up for the week, things we should be aware of, things that we should be prepared for, right? So, not going to spend a whole lot of time on it. I mean, it's the same thing. It's the same process every single day. There's nothing new to learn. There's always something to learn, I suppose, but there's nothing new with the process. The process is the process, and it's basically, apply it, rinse, repeat. That's all there is to it. It's all about following the process. So let's go ahead and jump into it. We're gonna hit. Excuse me. I don't know what happened to my throat. We're going to jump in here to have a look at the news that's coming up this week, just to talk about what the potentially impactful events are that are happening this week. Then we'll pop over, we'll hit Forex, talk about what we're looking at here from potential trade opportunities. And then we'll hit the futures market, and from there we'll roll on. I might touch on crypto for just a second. I'm doing some things with some automation there that I'm pretty excited about. It's getting good results, and I'll share that with you as well. So let's start here. Let's go to this screen right here. News. Again, I talk about news. We want to know what news is coming up for the day so we can plan our day around it. Today we don't really have any. In fact, for the week overall, it's fairly light with the exception of Wednesday. Go out here and look. Never hurts to, on a Sunday or a Monday, look at the whole week just to see what's coming up and see what events you should have on your calendar, have on your radar that could be impactful. But Wednesday is kind of a big day for us. We've got the core retail sales, which will could potentially be a market driver. But the big stuff is Wednesday afternoon. We've got the FOMC projections and statement coming out, followed by a press conference. This can certainly be market impactful, especially as we talk about things to come in the future, and Q&A is hit. Folks always tend to want to try to front run these events or watch these events and trade during them. And certainly there's people that have plans that trade around news, and more power to them. For me, I found it's much less stressful to just avoid it. Let the market do what the market's going to do. Let the news come out, let the market figure out how it wants to interpret that, and then move on without any thought as to, well, it came out as this, and the forecast was this, and therefore I think it should do this, and then forming your bias and trying to apply that to the market, because then you're trading with these blinders on. You've got these preconceptions about what you think the market should do, and you're looking for every excuse for it to do that, and then trade that direction. And I've personally found that to be very stressful. So I think it's better let the news come out, avoid it, avoid the news, and then do what you need to do based on your plan after things return to normal. All right. So Wednesday, the big day to watch for. Is Wednesday, which would probably drive Thursday and Friday as well if there's something really impactful for Wednesday. Of course, as always, just because it's a red report doesn't mean it will be impactful. It means it has the ability to be, depending on what comes out of that, how the market interprets it. Could be nothing. We have days where these high impact reports come out and the market barely even blinks. So again, everything in trading, it's different every day. There's nothing that's consistent except maybe the inconsistency of all the factors that are coming at us. Every day is a different. I don't know what personality I don't know how you want to call it, but all the factors that are driving the market today are different than the factors that drove it on Friday and on Thursday and on Wednesday. Every day is different. There's different pressures in the market and different things that are causing it to do what it does. So, which is why it's so important to have a consistent plan of how you're going to interpret that and how you're going to take action on it. I know I can't stress that enough. I say it every damn day. I gotta have a plan. You gotta have a plan. You gotta stick to a plan. It's the only way you'll ever be consistent. What's happening in forex land? Well, forex land, we've certainly got some movement. The pound, definitely is the strongest currency in relation to the other 7. So watching the 8 major currencies here to figure out which currencies that we might want to trade against one another or trade with one another. So the pound is certainly a strong currency. Of course, they come over here and we look across the pound, the pound cross pairs, ones that we are typically pretty active, and they've already moved a lot. So like the pound CAD, it's moved 139 pips on an average of about 135 or so. Pound USD, it's moved 113 pips on an average of about 135. There might be a little bit of room left there, but a lot of our pound cross pairs have moved at or around what their typical range would be. So pound USD might be an opportunity for us. We only need 20 pips out of it. It's kind of hit its top. It's pulling back a little bit here. So if it pulls back a little and then breaks through the top of this breakout box, we might have room to move that additional 20 pips in order to get us into a profitable area there. So that could be interesting. So what are we watching? Certainly the pound is a strong currency, but so is the euro. The euro is also a strong currency here. So looking at some euro cross pairs could certainly be interesting for us. We look at the euro versus the CAD, and we pop over here and we can see, well, hey, the euro versus the CAD, it's moved 67-ish. Well, it's moved 67 pips, and its average is around 90. Could it get that extra 20 pips if we, see this flip over and break through the top of that breakout box? Certainly right now, our volume indicator indicates that we've got some selling pressure on this, but if that crosses over, to green, indicating that we're crossing back from that selling pressure that was coming into the U.S. session, and that crosses over to green here, that could give us that opportunity to buy on this euro versus the CAD, because at that point the volume, the volume would be in line with the direction that we're looking to trade that, and we've got the range left for us. So that could certainly be interesting. So the euro versus the CAD. We've also got the euro yen. If we look down here, the euro is a strong currency. The yen's a weaker currency. And if we look at the range, we've moved basically 40 pips, 38.6, basically 40 pips for the day. And our average range is about 90, so there's certainly opportunity there. Again, if we break the top of this, we've got some room to move. Of course, I would favor the CAD over the yen simply because the CAD isn't going to, or the CAD is an open market right now, whereas the yen is not. So you're going to see more trading on the CAD, more volume here on the euro versus the CAD than you would on the euro versus the yen. Doesn't mean this one can't move. It just simply means that I'd rather trade with the current markets that are actually in session, though. So I'd favor the euro CAD over that one. Then we've also got the euro USD. What's happening with the euro USD? That one's moved 40 pips. Its average is around 80. Certainly opportunity there. We don't talk about the euro USD often because it's typically not as volatile as some of these other cross pairs that we can watch. But today we've certainly got opportunity here. So again, our volume indicator is showing that we've got volume that seems to be favoring the continued buying of the euro versus the USD. So we've got green here. It's indicating that we're continuing to buy this. So certainly if we break through the top of this box, this could be an opportunity as well. So I would say, as we kind of stand coming into this new session, pound is interesting, but I think there may be more opportunity in some of these euro cross pairs like the euro CAD or the euro USD. That's where I'm looking right now, would be on these two, and even here I'd probably favor the euro versus the CAD as we get going here in the session. So that's what I'm gonna look at, is this euro CAD for a breakout of that top level to see if we don't get some continued movement. But again, in order for that to really be valid, we need to see that volume detail flip over to the green side to where we've got the the buying pressure going along with that direction we'd want to trade, which is that euro continuing to move to strength against the Canadian continuing to move to weakness. So there we have it. So that's what we're looking for there. Popping over to this screen right here. Let's have a look at futures. By the way, so I'm on TradeStation right now, and I had switched last year from Interactive Brokers to TradeStation for what we're doing here, and I'm going to make one more switch. Still trading in TradeStation, but you're going to see my charts pretty much solely be in TradingView. So it'll be in TradingView, trading my TradeStation account. TradingView is a charting platform, which we've talked about before. It's a charting platform that is HTML5 based. What that means is it's a web-based charting platform. With TradeStation, I've got to, just like with Interactive Brokers or most other brokers, you've got to install something on your PC, right? And you've got to have a PC, by the way. I'm a Mac guy. I have a PC. That's what I trade from here. But overall, I use Mac. Everything in the house is Mac. My wife's got an iMac, my son's got an iMac, an iPad, iPhones, and the MacBook Pros, and we're Mac people. Have been for years. I actually used to work. I don't even go there. Back in the 90s, I actually worked for a company that, for a brief period, there was a Mac. Mac outsourced their OS, and I actually worked for a company that made Mac clones. But that's a whole other story, a lifetime ago. So anyway, so we're Mac people. So the cool thing about TradingView is you can set it up, and it works across all platforms because it's HTML5, it's internet based. If I load something here on my PC and I've got it up and I'm using it, and I want to see what's going on, and I'm in my son's room and I want to pull it up on the iPad, I can pull it up on the iPad, and it's the exact same charts doing the exact same stuff. Love it. Plus, it also, a lot of what I have had written is in PineScript, which is a script that's for TradingView. So that allows me to have some automation there that I don't have in TradeStation. I thought about having stuff recoded for TradeStation, but I'm like, why? It's all in TradingView. I can just use some things to automate processes that I want to have automated. So anyway, long story short, that's why pretty soon everything's going to be in TradingView instead of looking at these charts here in TradeStation. But it'll still be my TradeStation account. It'll just be looking at it in TradingView, which looks like, where is that? It'll look like this. Oh, there we go. It'll look like these charts. So anyway, so that way it'll be more familiar. So you'll see that change coming this week as everything gets moved over. All right, so right now, what are we watching for? S&P, kicking it off, mixed bias. What does that mean? Sit on your hands. We don't need to do anything. Right now the 4-hour bias is short, so we're looking for down here on the S&P. 4-hour bias is short, but it seems to be finding some support down here, right? We're short, we're finding support down here at 3,300, and price is certainly bouncing around a bit. So right now, coming into this new session, we've had kind of a run up in the off hours, and our 30-minute bias is showing us that we've got a long bias here. So 30-minute bias is long, 4 hours short, 30 is long. Instead of trying to guess and figure out what it's going to do because we have to take a trade, step back. You don't have to do anything. If our plan says if we've got a mixed bias, we don't do anything. The bias is mixed, stay away from it. So that's what we're going to do. We're going to stay away from S&P. If you absolutely had to do something, if you're just jonesing for a trade, I can't possibly go a day without taking a trade, then what we'd do is you could probably, I'd favor the 4-hour bias, and you might look to say, hey, if this thing pulls up to 3380, which is up here, if we push up to 3380, that's a big level on the 4-hour. You could look to sell off of that. Could also look to say, hey, if this thing breaks down, we break below 33.50, we could look to start selling, maybe even 33.40, because that's where it had gapped. It gapped open to 33.40. So if it pulls back to 33.40, even down here we've got 33.35 is our support area here on the 4-hour. If we pull back down to here, we might look to buy it. So if you just absolutely had to do something, you could play within this channel right here and see if you don't, if you can't pick up, some opportunity. So you could be selling off of 33.80, you could be buying off of 33.35, 33.40. If it breaks those areas, though, you're going to have to say, well, make some decisions from there. If it breaks down below 33.35 and closes below that, that might be your opportunity to continue selling off of that breakout right there. So you can look at bounce trades in here inside this channel, but if it breaks it, wait for a retest and then continue to sell lower in the direction of that 4-hour trend. But this, I would say, the safest bet, because you don't have a confirmed bias, right? They're mixed, would just be to save your trades for another day. But that's totally up to you. If you absolutely have to do something, if you have to take a trade, you can't possibly sit on your hands for a day, then that's what you'd be looking for, would be this 33.80 and 33.35, 33.40 area would be your areas to look for trading off of. Over here on crude, we're in a short bias, so crude is looking to go short. As a matter of fact, if we look at the trading plan over here, crude shorted on Friday, and we were in that entry from here, crude short, waiting for it to pull down and see if it doesn't fill in and get some profit there. So crude, we're looking at continued short, where 4-hour bias is short, 30-minute bias is short as well. So crude, looking for short trades. What does that mean to us? A couple different ways to play it. You could say, hey, we're currently, we talked about 37 last week as being a key level for us. We're hanging right at it right now. So, this has got a lot of momentum coming down to 37, but break close below 37. You might look at this area as a retest. You might even look, if you want to go a little lower, looking like 36.80 area. If we break below that, looking to short off of that 36.80. I'd say 37, but even down off of 36.80, looking to short, which is in the direction of that current bias, right? We got a confirmed short bias. The other way to trade it is wait for pullbacks, wait for the market to make higher lows and higher highs, and then trail your entry off the bottom of those previously closed higher low, just like like we're seeing here. Price is pulled down, it starts pulling back, push down here, starts pulling back. It's making higher lows, higher lows, higher lows, higher lows. Play the break of that previously closed higher low. Now, take that with a grain of salt. I'm just showing you an example here of what it would look like. I'm not saying that was a trade, because it isn't. You want to trade during hours that you've got volume and volatility, and that's in any market ever in the history of ever. You want to put your trades in during times that you actually got other market participants there. For a number of reasons, but the main reason being, that's the best time you've got that potential volatility is when you've got other participants in the marketplace. If you're just blindly following a system like that and trading every chance it gives you to trade, you're going to be trading during off hours where your spreads are wider and your distance between your bid and ask is higher. It's a higher cost to get in, and you've got more opportunity for that trade to move against you and just stop you out almost immediately. So keep that in mind. You want to trade during times when you've got bigger market participants. You can find that by adding a volume indicator to your charts. Not a volume indicator like I use a time segmented volumes. That's what the volumes are on the forex side of things. But if you just throw volume on there, you'll see times of day where volume is higher than others. So you want to trade during those times of day when you've got more volume being traded on whatever instrument that is being traded. It seems like common sense, but it's not always that common, right? Trade when you've got opportunity. Trade when you've got other market participants. Trade when you can get in and get out. That's what volume's given you. So anyway, I don't know where I was going down that rabbit hole. Oil, oil. So when is it better to trade it? Is right now that when this was pulling back over here, were these great times to trade oil? Probably not. Your volume's going to get higher a little bit later in the day, and that's when you'd want to be making your trading decisions. So, but anyway, with that said, watch these key levels. 3,700, man. 3,700. 37. It's been a big level for us. So 37 is certainly going to be a key point of support here. We can see it back here on the 4 hour. Has been huge, and now we're testing it again. I feel like we break below this, even down below 36.80. That's your opportunity to continue short. Of course, again, as we get into heavily traded time, you watch for pullbacks and then trade off of those pullbacks is another great way to go. Gold. What's happening over here in gold? Gold, we've got a long bias, and it's hard to see right here because the green is kind of washed out. We've got so much up and down right here in this area. The green's kind of washed out, but take my word for it. Here on the 4 hour, the green is above the red, so that's telling us we've got a long bias on the 4 hour. On the 30 minute, the green is above the red. That tells you we've got a long bias on the 30 minute as well. So even though this 30 is looking pretty flat, over the last bit here, last couple of days have been fairly flat, but we are in a long bias. The 4 hours long, the 30 minute is long, so that tells us to look for long trading opportunities. What does that look like? What's a long trading opportunity look like in gold? Well, same thing it looks like in other places. We can watch for key levels, so 1960, big level for us here. If we look at this, and I don't have a line on it, but if we look at 1960 and go back a bit, we can see that's been very well. I'll just put a line on here right now. It's been pretty well respected, right through here. Right through here, 1960, big level for us. So if we break 1960, that'd be our spot to go long. So we can look at long opportunities, 1960 or above. As it breaks through here, we could watch for pullbacks back to 1950 again. 1950, another pretty key level of support or resistance, depending on what side we're on. Dang it! What have I done? Dang it, I'm clicking and moving, and all sorts of stuff is happening here that I didn't want to happen. Let me go back and put this one back on over here, right through here. So 1950, another big level for us, on gold. So 1960, looking at breaks above, pullbacks down to 1950. Look at opportunities there. Of course, as mentioned before, the other way to go, we're in a long bias, so we could watch for the market to pull back, making lower highs and lower lows, so lower high and lower low, and as it does that, we could trail that breakout entry on that previously closed lower high. So a couple ways to go on gold there. So that's what we're watching for. Just remember, if the biases are mixed, you don't have to take any action. You don't have to trade every single day. It's tough because psychologically, when we have this identifier, I'm a trader, we tend to want to have to trade. It's like lawmakers. I don't know, when the hell did these people become lawmakers? It's bullshit. Anyway, they constantly make laws, idiotic law. Anyway, I'm sorry, going down a rabbit hole. Angry old man. Yeah, you don't have to trade every day. You can, the concept of trading is about having a process that allows you to look for the very best opportunities, and that's trading. Is we're looking for the best opportunity. If we don't find the opportunity, we've traded that day. We've watched. We've traded. The opportunity didn't come, so we never actually pushed the button. It's like going fishing. You didn't say you didn't go fishing, even though you sat on the lake for 4 hours. Casting and going to different spots and looking for things and trying to find that best opportunity to catch your bass or whatever it is you're fishing for. I'm not a fisherman, but other than I'm standing on the lake with my son doing it. You're out there fishing and you didn't catch anything. But the act of fishing was looking for that opportunity to reel one in, right? Just because you didn't reel one in doesn't mean you didn't go fishing. It's the same thing with trading. You don't have to click the button. You're in charge of clicking the button. You're in charge of putting the fish on the hook, unfortunately, which is a whole other level of psychological things. But you don't have to do it. The act of trading is the act of watching the market and seeing if that best opportunity presents itself. That's the act of trading, not actually clicking the button to be in a trade. So you don't have to be in a trade. I mentioned on Friday, another person that's a professional trader that I like and follow had mentioned likened to baseball. If you're playing baseball, or if you're hitting anything for that matter, if someone throws something at you and it's 4 feet away from you, you're not going to swing at it. You're not going to try to hit it, right? You're going to want to hit the one that's the best opportunity for you to connect with. So the ones that come close to you, that are in your strike zone, that's the one you're going to swing at. Yet in trading, we keep trying to hit these things that are 4 feet away from us instead of waiting for that best opportunity for it to be in our grasp. So that comes back to focusing on the process. Have some sort of a plan, whether it's the plan I talk about or your own plan or somebody else's plan, I don't care. Have a plan for approaching the market and execute that plan. And whatever that plan is, be the best at executing that plan without deviating from it. That's going to give you the consistency that you're looking for. All right. Futures, forex, crypto. Let's talk about crypto over here. So I mentioned I'm doing some stuff in the crypto space, which I haven't talked about crypto in a while. And one thing I'm doing with it is taking the exact same process that we've been talking about on 4-hour time frames on crypto, and I'm chunking it down into a shorter time frame and setting up an automated process to trade it around the clock. And this kind of hit my radar. It's been on my radar for a while. If you guys have followed me for the last year and a half, you'll know that I've done a lot of stuff in the crypto space over the last few years, and automated trading is really bringing itself to the forefront for me. And there's stuff I've automated, stuff I haven't, stuff that's still manual. But I am making a concerted effort through 2020 to get more automation in. And there's a process that I'm applying using the exact same indicators that I provide to you guys here on TradingView for those of you that have asked for them. Attaching an alert process to it that then automates the trades into my crypto platform. So I'm testing that right now. I don't have live money in it, and I probably won't for a month at least. But testing, I might go a little bit faster than a month. I don't know, but we'll see. But I am testing it right now, and the results are looking pretty good. But I'm a little concerned about some of the stuff I see in the using leveraged trading in crypto, like on Bybit, BitMEX. Bybit's the one I'm using. I see stuff sometimes that bugs me, and it kind of makes me wonder about how accurate the fills are going to be on it. I think they play some games with their traders by throttling, and I used to see this in forex a long time ago too, before regulation really stepped in there. But I think it seems like during times of really high volatility, they throttle what's happening. So traders get slipped pretty massively, which is a little worrisome. But we'll see how it works. I mean, I'm not trading super short term. I'm looking at 5-minute, 3-minute charts, which I could never trade, especially around the clock. I could never trade that as a human being. So the automation is critical here. But in order to trade those shorter time frames, your fill points become way more crucial, because if you're constantly getting slipped, it's if you're getting slipped on your entry and you're getting slipped on your exit, your profit points become much lower, and that's and also the cost behind it. If you're taking more trades, if you've got lower, if you're being slipped on your entry, slipped on your exit, and your ability to profit goes from here to here, so it becomes lower, and you've got the cost of all these additional trades that you're taking on short time frames. It may stack up to not be as profitable, as I might like it to be. So anyway, playing around with that right now and seeing how it looks. It's certainly an interesting rabbit hole to go down, but it should be a side project, and it is. So the other stuff that we're doing is just something that allows us to have fun and take on side projects. So that's it. We've talked about forex. We like the like the Euro CAD, even like the Euro USD, but the Euro CAD I think is the one I'm favoring, which we talked about previously. So Euro CAD, like in there, and we talked about what to do in the S&P, crude, and gold, and just give you a quick look at crypto. So I think that's everything. I think we've hit it all. So anyway, with that said, I'm gonna get out of here. Let you guys get on with your day. Have a plan, trade your plan. Have a plan, trade your plan. All right. Don't take too much risk. Trade safe. We'll see you tomorrow morning, and we'll roll from there. All right. Bye.